Good evening, everyone. Thanks for turning up for this live stream here this evening. The day after the big hit in Bitcoin, the day after Bitcoin went bungee jumping, we get to zoom in on these markets and see how things have turned out. Today, I've titled the show Cryptocurrency Trading for Beginners. And so I want to go over a few things right at the start here that are important for cryptocurrency beginners and for people who are experienced with trading. Hey, Professor Wally, glad to have you here, and AOL Chandra. And Mr. Babs put up a chat earlier, and he says that BRK on Bittrex has went on a ripper, and he says, I hope I got $50 on that horse, but I do not. Investment Vlogs, great to have you here. I appreciate you guys turning up. I think the most important thing you can give anybody is your attention, because it's the most limited commodity that we have, your time. And I completely value you guys being here, and I'm humbled by the fact that so many people are coming back day after day. This is fantastic. So today I entitled this stream Cryptocurrency Trading for Beginners, and I wanted to go over a couple of the points that I talk about inside my book. The first thing for cryptocurrency trading for beginners and for experienced traders is it's important to keep a trading journal. The most important thing about a trading journal is that you can go back on it and study what were you thinking at a specific time about a specific trade. And then you can learn from yourself. The second thing I'd recommend for beginners in cryptocurrency trading is to say that you're on the right track. If you are looking for ways to make your money work for you, you are on the right track. And so stay on the track and go through the hard difficulties of learning at the beginning. Hey Barry, I'm glad you're here. Joseph, great to have you here as well. Fantastic. I see like 4 likes already and there's only 8 people in the stream, so that's pretty awesome. I know that the stream will grow bigger over time, and it's what I get out of it that keeps me coming back to it over time, because this is my trading journal. This is where I'm learning about my own trading system, and I'm going over it doggedly over and over and over. And great to have you here, Classic Brent, as well. Thank you again for tuning in. I know there'll be more people, and I didn't send out an email to the list today to announce this live stream, so the people who will straggle in now are already the YouTube subscribers who are getting the YouTube notification, and they'll come straggling in. So first of all, for beginning traders, and it's the same for experienced traders. Many years ago, I was a karate instructor, and I taught karate for about 20 years. And I always found that no matter how high rank I was in karate, and I got to my 2nd degree black belt, I still always learned things from going over the yellow belt training material, the white belt training material, the orange belt training material. I always had to go back to the basics and repeat them and repeat them and repeat them, and then you stack on things on top of that. And so it's the same with trading. You've got to go back to the basics over and over and over, no matter how sophisticated you are, how good you are. And so keeping that trading journal is key, because it keeps you reporting to yourself about what you're actually doing. And most people will not actually talk about how often they're wrong in trading. In the real world, we're taught that if you are wrong, you fail. And you're out if you're wrong. And so it's bad to be wrong. But in trading, you have to come to the realization that you are going to be wrong. It is not bad to be wrong. It's not even wrong to be wrong. It is so common in trading that you have to assume that you're going to be wrong. And once you get over that and you assume that you're going to be wrong, you can take your losses much quicker. You can write your trading plan down, and then you can actually trade your plan, because you know that you're probably going to be wrong at least as often as you are right. And so if you close those trades quickly when you're wrong, you reduce how much losses you have. You reduce the time that you're holding a negative trade that could have been put into something better. And you also reduce that emotional negative feeling of having a big loss and seeing your equity go down, or even just stagnant sideways. So expect to be wrong, and if you are knowing that you're going to be wrong, you'll take your losses quicker. So first of all is the trading journal. Write that down so that you can go back and see when you are right, when you are wrong, and you can start to reinforce the correct thinking that you had. And when you see that circumstance come up again, you can reinforce that. It's behavior modification. The second thing is to assume that you're going to be wrong. It's okay to be wrong. And those are some of the most important things for beginning in trading. And as I go on about this, I want to put this disclaimer in there that I am not a registered investment advisor. I'm not a broker or dealer with any exchange commission. This is just my own trading journal. And as I go through and present these things, I'm pretty much presenting to myself as much as to you guys. Now, the third thing for beginning traders is to stick with a specific strategy. There are uncountable ways to trade. Day trading, swing trading, trend trading, range trading, breakout trading. It goes on and on and on. There's so many different ways to actually trade. Once you've studied and you found one that seems to be successful, you see the logic in it, you can go back through the historical charts and see where that pattern shapes up. Then stick with that. Get really good at it. When I was teaching karate, I could teach you everything you needed to know about a front kick in about 10 minutes. How to pick up your knee, how to hold your foot, how to extend your leg, and how to pull it back quickly so nobody can grab your foot, how to put your foot back down with balance. And really, in 10 minutes, it's like sort of teaching you skydiving. You really could learn how to hold your arms out sideways and pull the ripcord and everything you need to know in about 10 minutes. It's not that hard. There's not that much to know. But the most important thing is that when you are in times of stress, you'll always return to your habits, whatever your habits are. And if you don't have habits built in already and you come into a time of stress with your trading, you don't know what to do. That's where the fear and the indecision comes in. And so stick with one strategy, get to know it, write it down so that you can tell somebody else about that strategy, put it on paper so that you know it clearly exactly what you're going to be doing when. So when this happens, I do this. When this happens, I do this. When this happens, I do this. And then with your trading journal, you go over it over time and you say, okay, when this happened, what did I do? When this happened, what did I do? When this happened, what did I do? Now you can actually start adjusting your behavior. And then repeat it over and over and over. Often there isn't enough time to repeat it in the charts because the market only does a bull market, if you're looking for that, every couple of years maybe. And so it takes a long time to trade the market in a way that you can get the skill. So the other way to do it is to go through back testing, take out the old charts and roll them forward one step at a time and see. So bring the charts all the way back and then bring them forward one step at a time. Can I do it? Nope, all the way to the end. How about this way? There we go. I'm using my arrow key off to the side of my keyboard, and I can see this moving one square at a time, one square at a time, one day at a time, or one bar. And I can make my decisions, write it down, okay, this is what I would do. Then go like this is what happened, this is what I would do. Then go like this is what I would do, this is what I would do, this is what I would do. And since you have all of your plans in place, and you have these charts, hundreds of them, in order to go and do your back testing, you can gain a great deal of experience without having to even trade in the markets. You could have your money in your pocket and go through these back testing, practice your trading skills and your entry signals, your exit signals, your risk control rules by just going one day at a time, one bar at a time in these charts. And so I hope those tips are helpful for experienced traders, for beginning traders, and for anybody who's watching this. It is a reminder for my own self to practice the basics and spend the time at it. One of the things that I've put together here that I'm spending the time at over and over again is to go through my simple trading plan, just one of the variations that I teach in my book. And the simple trading plan is the break of a downtrend line, the 1, 2, 3 bottom formation, and the moving average crossover. And as we were trading this, following this market along, all the way along here, we didn't get a trading signal in Bitcoin all the way along as it was going. We did not get a buy signal all the way as we were watching it. All those three things had not added together to give us a buy signal. And so in one way, it protected us from buying in and losing money if we were following that trading plan. The other part of this trading plan should have had an opportunity for going short in this market. And I'm going to be talking more about taking short positions in the markets as time goes along. Every poor person can mine MIB coin on their smartphone. Awesome. I think one of the killer apps I think that cryptocurrencies provide is a way for people to learn about trading, learn about different ways to make your money work for you in micro sizes. You can start off with a couple dollars worth of Bitcoin and you can be trading these markets. You could be buying a couple different Ripple coin. You can buy a couple, so many of these little coins that are worth less than $1, and you can be practicing your trading with lunch money, and you're gaining huge skills with very little bits of money. I'm very, very excited about that. So in this long ongoing live stream series that was going to keep going for months and months and months, we've been going through using the simple trading plan and doing a trading journal on all of the markets on Poloniex. Now the same plan can work for any market that you're in. It doesn't have to be the ones in Poloniex. And what we're trying to study here is, when does the bull market actually start? And as we all know, let's go back to this chart and let's pull up let's go to Poloniex so I can pull up Factum. Factum has just broke out of a bottom formation. We'll take a look at that chart in a bit. Let's pull us all the way back so we get some time perspective here. We can see that in 2017 we had a bottom formation here in March of 2017. But in July of 2017, let me pull this chart all the way over here and drag in for these for this back testing. Look what happened here in December and January of 2017. Nice run up, and it pulled back, and it started to come up, and the moving averages crossed over. It looked like things were taking off, and then it all got hammered down. This is a very different market circumstance because Bitcoin was going up and all the alts went down as a result. And then it wasn't until this time in March that we hit a bottom formation, and look at what happened in this bottom formation. Huge candles to the downside. And then things took off. They started going and going and going and going and went up and up and up to crazy highs here. Really went fantastic as prices were going along with Bitcoin. And then we know that prices went all the way down through 2017. They made a bottom here. It looked like it was bottoming out and going to be taking off. And then it failed from there again, just like we saw in January, February of 2017. Now in November and December of 2017, we see it failing off to new lows again before it took off and went higher. And then things came down, and in April and May, it made a little bit of a bottom formation, looked like it was taking off, and then it's been fading down ever since. So each of the times that before it went on a bull market, we saw the bottom come in, and then it rallied a little bit, then it failed off again before the big rally came in. And we may be in that same kind of situation now, where we've hit a bottom, it's rallied a little bit, it's pulling back because Bitcoin has crashed so hard. And we just have to keep watching and keep watching to see what actually turns up and happens. So 3-month view. Let me refresh this page. Alrighty, so I'm grateful to see more people. How low can Bitcoin go? Ace, it can go a lot lower. It may hit $2,500. This is just the beginning of the down. And since you asked that question, let's go back to when the inverse happened. Exactly the opposite pattern. It's upside down to what we just see now. You see this ascending triangle? Everything's hitting along this level. Hits this level and bounces. 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 Then finally, when it breaks through that level, there's hell to pay for the bears. And now we're in a position that's opposite to this chart pattern, where it came down and bounced, down and bounced, down and bounced, down and down, down, down. Now it's cracked through that. We've got some reckoning to pay now. I'm thinking it's going to be retesting these levels here at the $4,000 level, and it may do a breakdown to the $2,500 level before it makes a bottom formation and starts its trend back up. So it could be a long time. It could be more than a year. It could take 8 months for this to finally play itself out. These kind of moves take a long time. As we see here, we can see from October 2017 to October 2016 to October 2017, and then this big blow off top and then back down. So it could take a long time. And which is why I like to do this study of tracking it day by day, so that we can actually see in a graphical format how it's going. And then over time, we'll see what's going on with this. I'm still bullish. I still believe in the cryptocurrencies. I believe that they are going to be changing the way the world is working. And a part of me believes that the institutional traders and the hedge funds are already getting involved. And they know a lot more about the markets than we do. And they are pushing these markets, it's conspiracy theory, they're pushing these markets down to squeeze out all of the weak hands, as they call it, people who get scared easily and will sell out at the first sign of trouble. Because when they sell out, guess who's buying? Those institutions already have their buy orders set down below the market. So they have the money to shake the market and pick up all the things that fall out. So that was my thinking there. And there's my little soliloquy about beginning for beginning traders. Another thing I want to point out here, you can see on the screen, is the interest rate now being paid on Factum on Poloniex. Just by owning it and lending it, you can be earning 2% per day, which isn't too bad. If we jump into what's been going on here, it's risen more than 2% in a couple days. So owning it, you'd be earning as the price goes up. And if you were lending it at the same time, you'd be earning double dipping. You'd be earning even more. Now, I've said that big bearish thing about Bitcoin. And then we zoom in here, and what do we see? 1, 2, 3 bottom formation shaping up. Now, this is the 15-minute bars, so it doesn't count for the simple trading plan, because the simple trading plan requires that you look at the 12-hour bars instead of the 15-minute bars. Even looking at the 4-hour bars, that 1, 2, 3 bottom formation doesn't show. When we look at the 12-hour bars, there's nothing to look at here. It's a lot of time to wait for this to develop into something. But at the same time, let's go look at all the cryptocurrencies now and see how many of them have broken to new lows, how many of them have failed past the bottom formations that they've been making over the last 3 months. So we had a low in August. There's the 3 or 4 key lows that we had. August 13th, there was a low in most of the cryptocurrencies. September the 12th, there was another big low. October the 11th, there was another low. And now we have November the 14th, which was a major day of stress on all these cryptos. And as we saw in yesterday's live stream, there were 38 of them that had not broken to new lows. A whole bunch of them turned into cold fish. The moving averages crossed over, but they had not broken to new lows yet, even though Bitcoin had cracked way down past its lowest lows of this year. Many of the alts resisted, and they did not go down as far. So this tells me Bitcoin is losing some market dominance, and it tells me that the cryptocurrencies have had investments into them that are independent of Bitcoin. And that's a very bullish sign to see that they resisted and did not crack down with Bitcoin. So Ardor is one of those that resisted, and it has not cracked down. I'm going to mark it in our spreadsheet here as a near fail, which is an orange color. And then basic attention token, let's go on, and I'm going to jump over to Binance where it's got a little bit more historical data. And we can see here that according to the simple trading plan, there's still no need to get out of this trade. The simple trading plan is a long-term trend following strategy. And so it allows for the market to make a big run up and pull all the way back without jumping in and out of the market. So these kind of moves don't change your position. And there is good things to that and bad things to that. Good thing is that if the market is really on an upward trend, then this will keep you in the market for those long-term profits without having to spend a lot of time jumping in and out. The bad thing is, if this was just a bump in the market, then you give back a whole bunch of your profits. If this continues to go down, then the moving averages will cross over and it'll give us an exit signal, and we'll have lost the opportunity for all of those profits all the way down here. So it's yin-yang. You give up something for everything you gain. And let's zoom in on this a little bit. From its high, it's come down. Is that the total high? Yeah. So from that high, it's come down and it's swooped down again. And now we have an internal 1, 2, 3 bottom formation that it's broken out of. And this could be the position where we could say the market has retested itself and it's stabilized out on this new low. And it could be a time to be thinking of adding on to this trade. I won't say it's an add-on yet. There's a little bit more maturity that this little bottom formation needs. I need it to stay in this range for a little bit longer. Stay in this range and fight it out for a little while. And then when it breaks higher, that will be a confirmation that it is continuing on the uptrend. Then we would be able to draw an uptrend line that matches along like this. This would be very powerful. If it did this kind of movement over the next week or so, that would be really great. So I like to draw these out and see what's going on. But so it stays marked as a buy in our trading plan. We would have maintained that position. And BNT, I'll take a look at it here. Really pulled back. So it's into a, I don't know if it's near fail or not, but it's still within these ranges from its low on September the 12th. So it's come down and now it's a more mature bottom formation. So it's all good. And there's nothing wrong with that pattern for our plan. And I'll just leave it left as neutral. Now, Bitcoin Cash, I think, is no longer, right? Now it's just going to be the other two coins. This is split. So we have the BCH ABC and BCH SV, and this is no longer. It's not a coin anymore. And so I will just gray this out for now, and I'll update that a little later. I'll probably want to undo that because it's got some of the historical colors there I want to take a look at. So I'll just gray that bar out. BCN. Nothing going on here. Still making its bottom. It's laying flat. It may do something in the future, but it's just laying at its bottom, so it's a near fail. Bitcoin, of course, is turned into a fail according to this category because we're only looking for a bull market. We're only looking to buy low, sell high. This plan did not, erroneously, it did not have plans to go short in this market. BitShares also is a fail. So it's a fail because it went down below these lows from August, September, October, fail. So this is how I'm marking that out. And now we're watching it for its own new bottom formation from where it is. Because if we zoom out to a longer term, say the 5-year view, it's still, well, it's a descending wedge triangle. And it needs to make a bottom formation now at the end of this. It's made some enormous gains in the past. And it's a very good technology and on and on and on. So there may be, it may have its day in the future, and we'll continue to watch it over time. Right now, nada. Burst. So Burst is now a fail. It was looking not too bad. It made a little bit of run up, and now it's turned into a fail. So more data for our trading journal here. And yesterday it was one of the markets that had not broken to new lows, and now it has broken to new lows. So that is a double fail. Clam coin didn't break to new lows. It seems to be holding its own here at these levels. And so it remains marked as a neutral. Civic coin had turned into a cold fish. It had broken down. You see the moving average cross over there. But it still hasn't broken down below historical lows. So it's a cold fish, but not a... I'm going to mark it as a near fail. So we already exited that trade according to this plan. And we can see that we got into it way back in September the 29th and held it all the way through there. And part of the studies I'm going to do now is two alternatives to say we got in here and we got out there, so there's a little bit of a profit. But what if we had gotten out on the 4-hour bar moving average crossover instead? It would have been more profit that we would have kept in this trade. Get in on the 12-hour moving average crossover, get out on the 4-hour moving average crossover, and we'll study that over time to see which is better. But certainly it was better in this case. What's going on in Dash now? Okay, it's showing some weakness here. It was looking like a buy signal, but it is also careened downward and stays neutral. It's not above or below those levels. Now Decreed had turned into a cold fish. The moving averages had crossed over, but it's still not cracking down hard. Like, it's still above all of these old levels. So that's not bad. I'll leave it marked as a... I guess I'll leave it neutral now, because as a cold fish once, we're already out of it. We don't have to keep saying cold fish day after day. Digibyte, however, turned into a fail. It broke to new lows and continues to careen downwards, completely against my expectations actually. And this is where your trading rules have to over or supersede your thinking. Hey Dan, good to have you here. This is where your trading rules have to supersede your thinking. When your trading rules say something, you've just got to act on it, because you've got to assume that you are going to be wrong more often than right. And if I had overridden this trade and kept this, then at a much greater loss. And now it may be so far down that I say, geez, I don't want to sell it out. I'm just going to wait and see if in the future it comes back up. And I've been a bag holder many times in the past. So it's something to reflect on always and go back to those basics, go back to the basics. So Dogecoin has come down quite a long ways. And now it's giving us a tick upwards. So it's that's giving us the beginning of its own new little 1, 2, 3 bottom formation here. And it's at a good price range according to historical levels. It's at a pretty good price range. Now we'd have to wait for it to mature and give us that bottom formation before it can turn into anything else. I'll leave it marked as neutral for today. EOS has been neutral, and I know that I've got to go back to Binance to look at this one so we have more historical charts. EOS. Okay, it left as neutral, even though it had come down this far, and it's picked up a bit here, so it stays within its range of the bottom formation, and it did not break down to new lows. So the more of these that are holding and not broken to new lows, the better it is. But at the same time, we're seeing more and more of them collapsing, giving us near fails and giving us failed trades. So that's showing the change of tide. Now back to Poloniex and looking at Ethereum Classic and then Ethereum. Ethereum Classic had been a fail, and it remains a fail. It really took a beating. And Ethereum, although it dipped down, it's pulled back up pretty good. If we zoom in on this, it cracked down pretty hard with Bitcoin, but it's shown much more resilience than Bitcoin has. So it's disagreeing with the dump from Bitcoin, and that I take as a good sign. So Ethereum Classic is a fail. Ethereum stays neutral. Factum goes from neutral to a buy signal. Let's zoom into the 3-month view. That is the 3-month view. it's broken out of this 1, 2, 3 bottom formation on some good strength. The moving averages have crossed over, so it turns into a buy signal actually, and pretty quickly on some pretty good strong volume on Poloniex as well. So we'll mark this as a buy signal. It's like the only new buy signal we have here today. Game credits, fail. And so you can see when you have a specific strategy, you can just go and practice it and practice it and practice it. Gas is almost a fail. I'm going to have to mark this as a near fail. It's right down to these historical lows. And it's been marked as a near fail for a while now. GNT was one of the markets that I was also feeling pretty bearish about, because it made this great bottom formation and it was really showing some strength coming out of it, and then it's made its top formation and down it came. So it gave us that moving average crossover and it's pulled back, but it's another one that hasn't pulled back to new lows yet, so it's just hanging on there. And I'll leave it marked as neutral now. It has already been a cold fish. Hunter coin, I don't think it fared as well. It is broken to new lows, so it came to new lows. It was a fail, and then it redeemed itself to being neutral, and now it's come down to, is that fail or near fail levels? Which one would you mark that as? Would you mark that as a fail or a near fail? Answer in the chat there if you've got an idea. Which would you mark that as, a fail or a near fail? I guess it's kind of splitting hairs to decide whether it's a fail or a near fail, but I'm going to mark it in as a fail. KNC. Let's go to Binance, take a look at KNC. Chandra, take it as a fail, yep. Here's another one that's come from a nice trading pattern, a nice breakout, and then it fell back. So here is another example of being prepared to be wrong. Even though you were right, it turned into being wrong. And as one of the weaknesses of this 1, 2, 3 bottom formation trading pattern is that this happens probably 6 times out of 10 more often than it doesn't happen. You get the fake out breakout. And Dan says near fail. This one, I have to give it a fail. This candle has actually gone down lower than the candle from September. So it's really connected to Bitcoin, this one, the psychology of the traders who are following it. But look at how much time it took for this bottom formation to shape up from middle of September all the way through October into October, the end of October. Here we are, the 26th, 27th. And then from there, it's still looking pretty good on the 2nd of November. And then it started failing a long time before Bitcoin cracked. And some of this trading journal stuff to watch is look at this 1, 2, 3 top formation, and it broke this uptrend line. And I'll bet you we see this pattern over and over again of these bottom formations shaping up. It looked like it was surging, and there's a specific trend line where it broke. And I'd like to go through and analyze all of these so that I can see that pattern happening everywhere. And then I should be able to go through and recognize where the opposite is happening, or when this is happening again, where you see 10 markets out of the 50 all breaking a trend line at the same day, at the same time. It's not a fail yet. It's still looking pretty good. It's still up above the buy signal and everything, but that is ominous. So this one is marked as a fail. And let's go and look at Loom, because it's here on this. We've got most data here, more than on Poloniex. So what, I'm going to go back. KNC, we just saw this date right here. What is that date? The 2nd of November. Now let's go to Loom and look for the 2nd of November. Bang, right there. Same thing, top formation break right there. It broke that trend line and started to come down. And if we go back to the 2nd of November and watch the live stream from then, it wasn't on my radar. I was looking for the retest of these support and resistance levels and not the break of these trend lines like that. It's easy to see in hindsight, but that's how you practice and study and learn. And then we'll be looking for the opposite, because the simple trading plan is looking for the break of the downtrend line, the 1, 2, 3 bottom, and the moving average crossover. So watching for the trend line the other direction is also studies on how to get out of a trade at the right time. So at any rate, this is not a near fail. It's not a fail. It's still holding within this bottom formation. And I'll just leave it marked as neutral for now. Lisk, on the other hand, had turned into a fail. And it's bounced up from that fail mark, but not high enough to come back above these levels. So I have to leave it still marked as a fail. And I don't think there's any way to short this market. Many of these cryptos, there's no way to short it. It's part of the reason that I'm biased for the 1, 2, 3 bottom formation and the downtrend turnaround. Now, Litecoin, I marked it as a fail because it had this huge candle to the downside, but it's bounced up pretty good. Let's zoom in on that bounce. Zoom in on it more. It's not looking that healthy. As I zoom in on it, it's looking like a bear flag. This happens in a downtrending market where it does this little range up, and then bam, it goes down again after that. So it's not a bullish signal at all that it has made the skewer down and it's doing this little bounce. It's probably not very good at all. So at any rate, it still is marked as a fail from that bottom formation. Now MadeSafe coin, on the other hand, has been showing some strength. It hit this bottom, it's come up, and it's come up again, and it gave us that buy signal, and it still hasn't failed that buy signal. So let's also consider this trend line now. And a break below that trend line at these support and resistance levels would be bearish. So if I zoom in to this top, and I zoom in again, now we're seeing a divergence in the RSI as the top is being made here. We're seeing this trend line, and so we're getting more sophisticated in our exit strategy and protecting our profits or protecting ourselves so that we don't take losses after we've got into a trade. Being much more careful at the very beginning of a trade when it is first taken off. This is the time to be most careful because you're actually going to lose some of your investment money. When the market has gone up a ways, then you can you have your stop loss back a little bit, and then you can be risking other people's money, you're risking some of your profit. So at the very beginning of a trade is the time to be the most wary. We got a good question here from Dan. Do you think the BCHSV team leadership aggression has caused the BTC drop? Threatened to dump his million Bitcoin? It could be, and if that's the case, then it's probably just going to be a shorter term problem for us. It could be that that kind of news would scare everybody, but I don't think it's just that simple. I think that's what people are pointing to now after the fact. But the big truth is of how long of a descending triangle this has been, and the fact that we had descending volume all the way along here, and now we have much greater trade volume as it's coming down. So if the market trend was going to go up, we would see high volume here, lower volume here, high volume here, lower volume here, higher volume here, lower volume here, and then it would pick up and we would see less volume as it's cracking down. And what we are seeing is not quite the same as that, where we're seeing greater volume on the downside, greater volume on the downside, and now again greater volume on the downside. So The market's following the line of least resistance. It's the least resistance to be going down. And it's, if you do searches on Google about a descending wedge triangle, it is a commonly known bearish signal, especially when you add in descending trading volume as we come to the apex of that. And I had been speaking about this. I had mentioned this. I had talked about it, but did not prepare for a short position, which I regret. But it is my bias, and I know it. And so knowing it and saying it and learning from it, I have to change my behavior now and be more prepared for short positions. And I'm studying more short positions in some of the other world markets as well, as I see similar shapes of chart patterns. I want to be more prepared to practice short trading. So MaidSafe coin still remains its buy signal, but we have a little bit more wariness of that trend line break. MaidSafe. We have more wariness of this uptrend line break and this top formation that's shaping up there. And of course the RSI divergence at the same time is another alert that I want to document so that I can take action on it now, and I can go back and study it later and learn from myself. Mana did very well, and it's a good buy signal. Now what about the exit signal? As we zoom into the 1 month view, zoom into this view, the RSI is not showing us a divergence that shows weakness yet. So it may be that it's going to continue to go up from here. But at any rate, it remains a buy signal. And now that we're in a profitable position, we could put our stop loss up above our entry point and protect the money that we originally invested on this buy from here. And so you could put your stop loss just above that, so you're protecting your money, and then leave the market now to do its thing and see if it is on an uptrend for a long time. If it were to come up and make a double top here, I'd be watching the RSI, and I'd now be watching this trend line that it has made. We could call this a trend line here, maybe the trend line here, and a break from that trend line would, even like this one here, could have been an indicator to be getting out of this. Just in hindsight, to be pointing that out. It's difficult to trade in hindsight though. At any rate, this stays as a buy signal according to the simple trading plan. And NAV, it took a dive and turned into a cold fish. Wow, quite a dive. So getting out when your get out signal says get out often saves a lot of pain in the ass. And now we can take this trend line as our education, rather than only looking for this potential top formation to take off from here, recognizing where does the trend line set up below the market all the time as well. Where does it set up? Where does it set up? And for my own part, I'm still thinking that these markets are at historical lows, and we are just seeing a little test of where things are. Just like we've seen before, where it comes to the lows and then we get another serious test of those lows just after, right? It looks a little bit bullish, then it comes down, and then the market takes off. No way to know that, but I want to be prepared to study that conclusion afterwards. Namecoin, it had been a fail for a while. Zoom into the 3 month view, and it's sort of showing some candles of strength here, but it's still at a near fail mark. It's really down low. So I can't leave it as neutral in this. I've got to leave it as a near fail. And Navcoin, would I call that a near fail or a fail? Neutral, because it's not down far enough yet to be flagged as a near fail. It's just floating in the middle now. NXT was marked as a fail last time. Yep. Down to new lows. OMG was a near fail. How did it turn out? Holding on to the near fail status with a little bit of strength there. Omni was marked as neutral, and it holds on to its neutral status. It's actually got a little green candle there. Pascal was still a buy, and it was one of the markets that had not gone down to new lows. Okay, and it still remains a buy, even though it's had a pretty serious retracement. And on a larger scale, that's a pretty good looking bottom formation. Now for the trend line to get out, we see this trend line here. And that will add some knowledge to when to get out now, especially when we see a whole bunch of other ones giving us that pattern. Bitcoin has dropped off, and I have a feeling that Bitcoin's going to take quite a bit longer. Many of these coins are probably going to be ditching and going down longer. So even though it's still a buy according to the simple trading plan, let's tighten things up and pay attention to what's going on there. PPC, same thing. Okay, so it did a big jump and it's pulled back quite a bit, but according to the simple trading plan, the moving average crossover, it's still okay. We don't even have really a trend line to draw in here to say a specific point to be getting out. It's just only 2 points. It's not really clear. And we have the lower highs here, and the RSI shows us the lower highs. So there's nothing really clear in this to stay, except that as a habit of the breakout of the 1, 2, 3 bottom formation, as soon as the prices are above our entry point, we put our stop loss above our entry point to protect our initial money. And later we can change that stop loss, but this is a basic protection mechanism here. So if it does come back down, we say, okay, we were there, we put out the risk to try it, but we protected ourselves by putting that stop loss just above as soon as we can. So it remains a green trade for now. Quantum and Rep both turned into cold fish. And fell back a little further. It's getting a bit of stability, but it gave quite a candle to the downside. And so now there's that trend line I drew in yesterday. Same trend line here. Very important one. So it remains a cold fish, or yeah, now I'm skewing the data by not marking these as cold fish anymore, because those are marked as negative in our counting if they're a cold fish. So I got to continue to fill this out as the same way. Stays a cold fish. Rep probably stays as a cold fish as well. Yeah, actually I'll bump it up to a near fail, which is counted the same in our chart over here, but I just want to mark it for review. SBD turned into a buy signal. Look at that. It's supposed to be, well, it is. It's supposed to be tied to the dollar to be $1 each. And so as Bitcoin goes down, this should be going up. That makes sense. Hello, Evgeny Ermac. Good to have you here. Thanks for joining in, and wave back to you from around the world. So this is a buy, and over on Binance they have the true US dollar, and on Poloniex they have USDT and the other USD something or other that also they went up versus Bitcoin because Bitcoin went down. And we'd like to take a look at GByte on Bittrex. Let's take a look over there. Bittrex GB. Type correctly. All right, this is actually showing a bit of strength here as Bitcoin's gone down. So it made a bottom October the 12th, August 13th, September the 12th, October 11th. It made a bottom and it's showing a bit of a bottom formation here. So according to the simple trading plan, this is good and it's a watch, but it isn't a buy. We've got to wait for it to break out above these levels and the moving averages to cross over. So it's good to see. And especially good to see that it's been, like, it's really run up to some fantastic highs, holy. And then down, 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 down. So it's still in a downtrend. The downtrend hasn't changed. It hasn't given us a buy signal. But it's nice to see that it's making a potential bottom. And that's where the first part starts, is watching these, that it make potential bottoms and marking them and keep coming back every day, every day, every day. And then as soon as it turns into a buy signal, then you have to assume that you are wrong and you have to protect yourself, because more often than not, it turns out that the markets, they give it to you and they take it away. They give it to you and they take it away. Give it to you and take it away. And so you got to be prepared for that. This has come down to near fail territories. It was a cold fish. I'm going to mark it as a near fail, which is counted up the same in our spread, in our chart. SNT. Do we have enough data here now? Enough to say that it's not a near fail. It's not coming down to these old lows, but it's certainly has pulled back a little bit. And here's our downtrend line. And I'll bet you it matches up to November the 2nd. Nope. November 9th, 8th or 9th, that it was breaking this level and then coming down. So let's pay more attention to that as time goes along. So it was a buy and it turned into a fail. So I'll leave it marked as a fail, just for our data. Steam was a near fail. Now it's a real fail. It's actually come down to lower lows than it's been, and it's been fighting along that. We are watching this all the way from September, all the way along, all the way along. Never did give us a buy signal, which kind of saved our butt, but now it's actually a fail. Storage was a buy signal, then it turned into a cold fish last time. So just because it went sideways here for a while, then the moving averages crossed as soon and before it broke lower. So the moving averages crossed and said, it's taking too long, it's going sideways too much time, and then it broke lower. So that's pretty good. I think we just saw some liquidations go by. Short position liquidated. I hate to see any liquidations, but if there's going to be liquidations, I prefer to see a short position liquidated. Now we'll watch this one to see what goes on. There's another short liquidated. So it remains marked as a cold fish. STR. Is this going to keep going up? Well, it certainly looks like it. It's given some more strength here. Over the 1 year view, it's still an enormously great looking chart here as it's building up pressure. And wow. So that's great to see. It really reacted strongly when Bitcoin crashed, but then it's bounced right back up. We'll have to continue to watch this because now prices are coming up to these levels on the 4 hour. Let's go into the, I want to go back to the 1 hour. 15 minute, 1 hour. Here we go. It's not definitive, but I'm looking for the RSI divergence to see what's going on with the RSI. We can see here it was pretty clear, but right now overall it's not giving clear signal. Zoom back out to this view on the 4 hour bar, and then we're starting to see the RSI diverge a little bit more, just for observation. So it remains a buy signal, and we'll keep watching it. Keep watching it for a break of these trend lines now too. It's got a long ways to go. It's got some room above it. It's done well. Strat had turned into a cold fish. Hey, no worries. I'm happy to do a review. If you guys want me to review a specific coin, stick it in there. So this has come down to new lows. It is also I have to mark it as a fail. It's come down to these levels too hard. Even though we had it marked as a cold fish, I've got to switch that over into a fail. Syscoin. It's pulled back pretty strongly and not broken to new lows. It was never a buy signal, and it's not quite a near fail yet. Viacoin. Oh wow, look at that. There's our trend line break. What was the date? The 13th. So we saw the trend line break. We saw the RSIs were divergent but not critical. And then the prices came down and it crossed over. We're looking at the 4-hour bars. So, according to the 12-hour bars, even though it's come back this far, the moving averages haven't crossed over. We're giving it that much room, and I wouldn't recommend it. I would say that your stop loss should be above your entry point. Once the market proves you correct, get that stop loss up above to protect against exactly this happening, coming down and having a profitable trade turn into a small loss. So that turns into a cold fish. VTC has already been a fail and remains a fail. Counterparty, how was that doing? Always surprised me that this was doing good, and it's still holding on. Broken this trend line, holding this one. We'll see what goes on in that tomorrow. XEM. Wow, some massive candle to the upside there just before Bitcoin did its crash, and then it didn't really pull back as Bitcoin is doing its madness. So it remains a buy signal, and we'll watch to see what goes on. I know the market cap of that one really grew. XMR. It's pulled back and crossed below these levels, so that would be a get out signal as well. So it's turned into a cold fish from where it was, and that did that. We threw it in the cold fish bucket yesterday. XPM has been a fail, 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 and now it's showing a little tick of strength there, but it's still in the fail territory. Ripple, one of the few also showing strength. Now, when we get into this and look at this divergence of the RSI, as this is making level two tops here and the RSI is showing weakness, this may not be blasting off from where it is now. This could be where it has run its course, and it may continue, it may not, but I don't like the divergence in the RSI when we've got a double top like that. That'll be interesting to see how it plays out. It's one of my bigger holdings now because I do have a longer term view of it. And since I'm already profitable and added onto it and that's profitable, there's no worries on that. I'm willing to keep that position. At the same time, I want to pay attention now to this trend line and that divergence in the RSI, really key. We'll see what that does in the next couple days here. Zcash. It was a buy signal and it's pulled back quite a bit. So if you had taken this as a buy signal and put your stop loss above your entry point, you would have been kicked out of that. The other alternative is to wait for those moving averages to cross over. And if you start off with a position small enough, then you can let it go down to the number 3 point before it kicks you out. But with everything else kicking down now, that makes me want to tighten up on my stops. So Syscoin is working with Load 1 to create digital silver. That'll be awesome. So this one, I have to leave it as a green because we're following along the simple trading plan rules, but it may have kicked us out if we were actually trading it. ZRX also have turned into a cold fish and has pulled right back to our entry levels. So no matter how you played it, if you had put your stop loss just above your entry point, you would have been kicked out of this trade. Greens, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. One of these. 0 alerts. 1, 2, 3, 4, 5, 6, 7, 8, 9. Neutral. It's even less than before. Gone cold. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Something else picked up then. Near fails. 1, 2, 3, 4, 5, 6, 7, 8 near fails. Pretty pessimistic. Pretty sad. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 fails. 15 of them. That is nasty. Really nasty. Killer. And now we update this to AR. And we can see graphically how awful that is, where things were looking so good, just a week ago, and now it's turned right around where everything is failing, and many of them are going down below the lows that they were in September, October, and now making new lows. Time to be pessimistic? Yeah. Time to be pessimistic. Time to give up? No, definitely not time to give up. It's time to keep watching, keep watching, keep watching, keep watching. Keep being ready for when those bottom formations actually shape up and turn into something. So we'll continue on with this study over and over, day by day by day, even if it's just watching things go down, 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 and marking in our spreadsheet that it's going down, down, down. We'll continue to watch them all. So STR and Ripple are the leaders in the bunch right now. Let's go over to Binance. Drag that over here and see what's been going on here. So we have GXS, Mana, Bitcoin Cash, Poly, XLM, RLC. So some of these coins have been coming up, but the majority have been going down. 3, 4, 5, 6, 7, 8, 10, 12% here. And so that pretty much wraps it up. This is keeping on the same routine of going over these markets and marking out what's going on in the spreadsheet so that we can be watching to see when does the bull market actually take its start in. And when I saw the lows in August, on the 13th of August, and I saw things picking up by the end of August, I was already thinking, all right, now we've hit a bottom and things can be taking off. Then we saw the little bit lowers in September, but things rebounded right away. And I was thinking, there we go. We've got two lows now, August 13th and September the 12th. This is good for a bottom formation development. We saw another low in October that resisted going down past those prior lows. So this was even stronger formation for a bull. And this is where I've started to really pay attention and be excited about these daily bull market watch so that we could actually see it and document it taking off. But now we see that it's been a major fake out breakout over the last couple months, and there's still more pain to come in and more patience to be required in these markets. So in the meantime, there are other ways to be making money even in down markets. And one thing I'm doing is setting up a trading bot. There are 2 different types of trading bots that I'm going to be testing. And you can go over to watch and you can help get this project going over on twitch.tv/cryptotradingbotlive. And I've started up a donation stream over there. And I see that the donation I made here today still hasn't come through. I sent some money from my mining account over on NiceHash, and they only withdraw once a day. So I have to wait for that donation to land on the page. But I've set up a separate streaming profile here and a way to donate to support the bot. So you can head over to there, like the page, follow the page, post a comment there. It's just got a Bitcoin 1-minute bar and the significant trades feed going on there right now. And it's there sort of like the crowdfunding deal to help support the cost of this bot. I've put in half the cost already, and then I've added in some more. And we've had a couple people donating already, so I'm super grateful for that. And as we go along and we hit this $280 level, then I'll take that and I'll purchase the first bot, and I'll start this channel running that bot. And no matter if the market's going up or down, this bot will trickle in little bits of money, and we'll do reports on this as another way of earning cryptocurrencies, not just trading it, but also botting it. And that wraps it up for today. If there's any other things you'd like me to watch or take a look at, let me know, and I'd be happy to go and take a look at those coins. But it's all pretty pessimistic today. It's not a happy day to be looking at charts. Unless you are one of those guys to be prepared and actually go short at the right time on this, then you'd be a happy camper. Is there anybody following who's watching that went short? Cricket, cricket, cricket. So all of us as a group need to pay more attention to the possibility and the potential to go short in these markets. And don't feel that you're doing Bitcoin a bad rap by going short. We're not in this, we shouldn't be in this to just because we love Bitcoin. We should be in this to make money from whichever way it's going. Professor Wally doesn't do shorts, but he doubled up on 24 coins today. So this is one of the strategies, is to do dollar cost averaging. As prices come down, you add on to it, because if I bought 100, pardon me. If I bought 10 coins at 100 and it comes down to 50 and I buy 10 more coins, now I've only paid 75 for my 20 coins. You can average it out. And I think in the long term it's going to work, because I really believe that cryptocurrencies will go on a bull run. We're just seeing a little bit of panic and pressure down, and it may be months, it may be 6 months, it may be 8 months. But if you're trading with money that you don't need, and it's really extra money, it's risk capital, you can afford to lose it, then you can afford to sit on it for as long as it needs for it to actually turn profitable. It's just I want to practice going short on markets that are making massive descending wedge triangles. If there is a technical formation that shows a bull market, there's a technical formation that shows a bear market. And I shouldn't be biased to one side of the market, because you lose out on massive opportunities here. Instead of having my portfolio go down in value, I could have had my portfolio go up in value because of this move. And of course, in hindsight, it's obvious, but I was also talking about it all the way, saying, well, there's a descending wedge triangle. We see the volume dripping down. This is what they classically say is a bear setup. Watching. and then I didn't act on it. So that's for my own trading journal. So I'm grateful to see the people turning up here today. Yesterday we had some 260 viewers watching, and sure enough it was botted, because I got a note on Facebook, a guy offering me a paid service to bring up my view numbers. He's got all these people from Russia who are watching, and we know from yesterday I asked them to thumbs up the video or to comment in the chat, and we didn't get any interaction from them at all. I knew they were bots. Yes, doubling up and averaging down isn't for everybody. As you say, you have to have a plan ahead of time. You have to be able to afford it. Yes, yes, indeed, it's not for everybody. And so I'm trying to practice the rule number 1, which is to say that assume you are wrong and take off or reduce your positions until it proves you right. So if it proves you correct, then you move your stop loss just above your entry point. And I also am practicing rule number 2, which is to say you have to add on to your correct positions without exception. You have to add on correctly. And if you're going to add on to a trade, that means you didn't put all your money on when you first put on the trade. So you start off with a small position, assume you're going to be wrong, and so you can take that loss quickly and get out of the market and reposition. Watch again for another opportunity to get back into the market and start again. And this is what we're doing now, is we're watching again now for another opportunity to catch this market, catch this bottom formation. And you can't look away. It's like a batter standing at the batting cage. When that ball is fired, you've got to be ready to hit the bat. And I recall, and it's always hard to just pick out a market. Let's try Digibyte. Go to the 1-year view and pull it back. And this is a good example. Let's pull back, zoom in, pull back right here. So we're looking at the 1-day bars. Now this will screw it up when I click on this. I want to zoom in a little bit to the 12-hour bars. So right here, it's looking good. We've got this bottom formation. So beginning of November, it hit a bottom, came up a little bit, tried to go lower near the end of November, and it didn't. And then it looked at the very beginning of December the 3rd and the 4th, it was looking even better, looking like it was going to be breaking out. And I recall being there saying, okay, here's my bottom formations. And a ton of the markets were doing this at the same time. And then we know that it broke down and it looked terrible. It looked awful here. And I actually sold out of some of my coins at this time. I was demoralized. I actually sold out of some of my coins. I think it was on the 13th of December. And I have a video about it. And it wasn't the very next day that it started to take off and go up. And up and up and up and up. And if I had not panicked on this dip after these bottom formations, I would have done much better. I did well because I saw it was taking off and I put my positions back on, but I lost a good 20-30% of the profits I would have made if I had done nothing. And so I want to now document all of everything that we're going through right now, day by day, and find out in 2 weeks from now, 3 weeks from now, did it continue to go down? Did it turn around and start to go up? We just don't know. So you've always got to be vigilant for this new 1, 2, 3 bottom formation. Here it is, 1, 2, 3. It's very small. It didn't take a month to set itself up. It only took it a week to set itself up. But now let's be vigilant and watch for these. Yeah, we human, not bot. Yeah, and the human part is the emotions. And you have to understand how the fear and greed works there's a bunch of liquidated shorts going by. And only by studying the daylights out of this do I come to understanding better. 1, 2, 3 bottom formation in this small time frame here. And she's showing strength. So this is a buy signal. If you're a short-term trader, you could be buying this. You could be putting your trade on with a small bit of your money, not all of it. You don't want to risk getting liquidated, but it is looking like a turnaround trade. The moving averages is crossed. We've got a 1, 2, 3 bottom on this time frame on the 15-minute bars. And so this trading pattern actually does work. And then we would be really watching for any kind of top when it comes up to these levels. As a short-term trader, you're not looking for that big long-term trend. You're looking for something that only takes a day or two at the most sometimes, maybe a week. And you would be looking at nearby support and resistance levels as your profit target. So this will be interesting to see it play out as well, because there's more ways to trade than just the simple trading plan. But for this free video series that I've been doing, that's what I've been focusing on, is the simple trading plan. And inside my book, I talk about more of these different trading plans that are catch opportunities like this. Awesome. So yesterday we had a 2-hour and 20-minute stream. Today we've already gone an hour and 15 minutes just to go over these markets. It takes a lot of persistence, dedication, and hard work to really study these markets in detail. And frankly, sometimes I get bored out of my tree. So I know that this isn't the highest action, most exciting thing to be watching, but I think that it's an approach that has worked well for me in the past, made me hundreds of thousands of dollars. And this is why I'm putting in my nose to the grindstone, and I am putting in this hard work and dedication to be sure that I'm ready when it's time to swing the bat. So that's it for this stream. I appreciate you guys being here again. Thank you very much. And I hope we all make some great profits together as this does eventually make a bottom formation and turn around and go the other way. Have a very good evening, and I look forward to chatting with you guys all again tomorrow.